You're overpaying for car insurance right now. Not because you're a bad driver, not because you filed a claim. You're overpaying because you did something most people think is responsible. Something your parents probably told you to do. Something that sounds smart until you understand how the system actually works. Let me show you the math. There's a 29-year-old woman in Austin, Texas. Clean driving record, no accidents in 6 years. She's been with the same insurance company since she was 23, pays her bills on time, does everything right. Her premium this year is $2,100. Her coworker, same age, same car, same zip code, worse driving record, pays $1,260. 4 years ago, they paid almost the same amount. What happened? The coworker switched insurance companies. She did, every single year. Here's what nobody tells you about car insurance. The industry runs on a simple assumption: you won't leave. They're betting on your inertia, and that bet is worth hundreds of billions of dollars. 2 hits, your rate goes up a little, maybe $50, maybe $80. They'll tell you it's inflation, market conditions, rising costs of repairs. And sure, some of that is real, but most of it isn't. Most of it is them testing you, seeing if you'll notice, seeing if you'll call, seeing if you'll leave. You don't leave, so year 3, it goes up more. Year 4, even more. By year 5, you're paying 30 to 40% more than someone who just walked in the door for the exact same coverage, same risk profile, same car, same everything. The only difference is how long you've been sitting still. This is called retention pricing, and it's completely legal in most states. Here's where it gets darker. The people getting hit the hardest are the ones who can least afford it. Older customers, lower-income households, people in rural areas. Why? Because they're statistically less likely to switch. Insurance companies have the data. They know who shops around and who doesn't, and they price accordingly. There was a study done in 2022 by the Consumer Federation of America. They got quotes from major insurers for the same driver profile in 12 different cities. Then they got quotes for a customer who'd been with the same company for 5 years. The loyal customer paid an average of 38% more. In some cases, it was over 50%. 50% more for being loyal. Now you might be thinking, okay, but switching insurance sounds like a hassle. You have to compare quotes, fill out forms, cancel your old policy, set up auto pay again. That takes time. And you're right, it does. That's the entire point. They're counting on friction, counting on you deciding it's not worth the effort. And for a lot of people, it works. But here's the thing. Switching car insurance takes about 20 minutes now. You can do it from your phone. Most companies let you upload a photo of your current declaration page and they'll match the coverage automatically. You don't even have to call anyone. And the average American who switches saves around $470 a year. 20 minutes for $470. That's $1,400 an hour. You're probably not making that at your day job. So why don't more people do it? Partly, it's the illusion of complexity. Insurance feels technical. It feels like something you need to understand deeply before you mess with it, and the industry likes it that way. They use terms like liability limits and uninsured motorist coverage and comprehensive deductibles. It sounds intimidating, but it's not that complicated. Your coverage is just a list of numbers. If the numbers match, the policies are the same. The company name at the top doesn't matter. Partly, it's fear. What if I switch and then I get in an accident and the new company doesn't pay out? What if I miss something in the fine print? These are real concerns, but they're overblown. Insurance companies are regulated. They have to pay valid claims. It doesn't matter if you've been with them 6 days or 6 years. The contract is the contract. And partly, honestly, it's because nobody talks about this. Your parents probably didn't know. Your friends don't know. It's not taught in school. And the insurance companies certainly aren't going to tell you. So generation after generation keeps making the same mistake, staying put, paying more, thinking they're being responsible. Here's what makes this especially insidious. The rate increases are gradual, $50 here, $70 there. You won't notice it the way you'd notice if your rate jumped $400 overnight. It's the boiling frog problem. By the time you realize how much you're overpaying, you've already lost thousands of dollars.